Okay, so here we are, Mother's Day. So first of all, I want to say a huge shout out to my mom for raising me, and then I also want to say thank you to my wife because she has desired to have a child, and we're now pregnant. So we're excited about that, and this is really awesome. So huge change in life. Um, of course, right at the point where we're ready to pay our house off, we find out we're pregnant, which is awesome because what a great transition financially to focus the income on family and our future and not just paying off past debts. But I truly believe in getting out of debt because it frees up income to go where you want it to go. So I'm really excited about the new budget I get to do with all my income, paying all the bills, no more debts at the moment, and focusing on the future. So anyway, um, so I'm really thankful for Mother's Day and bringing everything into perspective. It's not just about money. It's not just about stuff. It's about faith. It's about family. It's about fun and about finances to be a tool in that regard. So, um, yesterday I did something that really helped me, and I'm going to show it to you real quick. I mentioned paying off the house, hopefully, maybe next month, June. Um, and what I made, let me look this up. This is a bag we got from a timeshare meeting that we went to on our honeymoon. Huge mistake. We even bought the thing, and we found in the fine print you could cancel within a few days, and thank the Lord we did. Because we decided to put that money into a house. Because you can get a timeshare resort place for maybe 1 week out of the year, if that, probably more like a few days in our budget, even with the timeshare. And you're paying monthly on this stupid thing, and it probably didn't pay off to your kids inherit it or something, if they can. But we decided to make our home a resort because we're here the other 51 weeks out of the year, right? So look, we put our money in this place, and we can use cheap hotels when we go places, and we save thousands. So that's just how we do it. Um, Resorts are nice, and if you want to save up and do a resort for a one-time thing, go for it. But I shouldn't have to pay $20,000 or whatever. We got our timeshare down to 13,000, and that was still ridiculous because you pay a monthly fee on top of that, and then interest if you put it on credit, which is what they try to get you to do. We opened a credit card, and I actually kept the card. It's a good card, but most people don't pay off within the zero interest time frame, and now you're paying interest on the debt, and it's just a losing strategy when you do the calculation for most people. And then you not to count the food. You say, well, I got to get used to my timeshare, so now you got to travel and pay for food and gas, and maybe even rental car if you do that. And you've put so much into it that the math doesn't play out very well. If you're rich, that's different, but for the rest of us, so here's what I did. And by the way, this bag is from that timeshare meeting because it took a bag to put all their paperwork in it. Well, we, ended up getting to keep the bag, but we ended up canceling the timeshare days later. We were already long gone by then. But what I did yesterday was I put together this binder right here. I like sheet protectors. And so what I've done is I put my housing documents in this. And that includes every payment we've ever done, every payment statement I keep, because I want to see how much is a reminder that I put into principal versus interest versus escrow, which is, of course, taxes and insurance. Those are your four big things, and possibly PMI if you have it. We put 20% down on our house. We don't have the PMI, the mortgage insurance. So we really just focused after our down payment and closing costs, our house payment, again, principal, interest, taxes, and insurance. That's it. Our taxes went up in this county because it was the most mismanaged county in the state of Georgia where we live. So our house payment went up by about $80 a month because of that nonsense. But in the meantime, our house payment is still under $500 a month. And so I would say don't take a house payment that's more than your rent that you're already paying, right? So you can kind of keep if your income is staying, and don't, buy a house if you're changing incomes, by the way, changing jobs or something. Be stable before you buy. Have savings for the down payment and inspection appraisal, all the little fees that come in, earnest money, etc. But anyway, make sure that your payment is about equivalent to rent. But now part of your payment is going to the equity of your home, right? As a future value, potentially, and part of your net worth instead of just all going to rent and never coming back to you. So if you look at a house payment as rent, and if you were to lose out on the house for some reason, well, you were going to lose out with rent anyway. You're going to get evicted if you don't make your payments, like you're going to get foreclosed if you don't make your payments on your mortgage. So the idea of this binder is to not only keep track of the payments, but the whole payoff. The very first page in here is the payoff statement. Because we're hoping to pay off, like I say, hopefully soon. And not paying more interest to someone else just for borrowing their money. So it looks like we will have paid about $5,000 in interest on a 58, let's see, $54,800 loan. And um, we were supposed to pay, if we'd done the minimum payment, about 40,000, 42, somewhere in there. So we will have only paid about 37,000 or whatever. I mean, we would have saved about 37,000. That's a paycheck for me for a year. That's a year take-home wage for me. Just saying. So it's worth it to pay off early for us. You say, well, why aren't you investing the money instead? Because watch what's going on in the markets right now, short-term and long-term. There's not just short-term volatility and the fact that the market's been priced so high already after 2017 and funded really from debt that created tax cuts, that created business growth and jobs. So we're in this boom in the economy, but there's no guarantees that's going to be able to remain or that the government can continue to keep those tax cuts permanently. And they're not set to be permanent for the individual, as you probably know. They expire about 2021, 2022, somewhere in there. So about the next election cycle, and especially if the presidency changes hands, and there's a whole different philosophy of government, more taxes and more social programs that those taxes are supposed to pay for, and less income for all of us, there's some things to think about in the future. And if it doesn't happen in the next election, it might be the next one. So we may be in the time of Joseph, where it's the time of bounty and jobs and cash, because then comes possibly the recession type side of things. And I guess some people think we'll never have another recession in our lifetime. I don't know about that. The normal business cycle. By the way, when we're in a time of bounty, in a time of Joseph, of saving our corn, of saving our money, what do? What is the strategy there? In my opinion, it is to put money in savings to have for the future, because cash is king in a recession. Even if we don't have a recession, cash is king whenever there's an adjustment in prices in the market, even if it's just housing that goes down. That's a buying opportunity. Buy low, sell high. So cash is king. So that's savings. I wouldn't throw it into high dollar investments that might be overpriced. Maybe moderate growth you can experience, but I wouldn't put all the money in the stock market. Wouldn't do that. I would get out of debt. That's one of the big things you can do. By the way, savings is a wonderful time to build up not just an emergency fund, but an investment fund. So, in my opinion, in the time of bounty, it's the time to get out of debt, to have savings for emergencies and investments, but liquid in your account. And thirdly, to get the assets that you need for a couple of reasons. Now you say, but if prices are going to go down, why not wait to buy things? Well, maybe in some senses with real estate, but with other things, prices are going up consistently. And so just because of general inflation, there's sometimes a reason to buy now, especially if you see pressure on that market. And secondly, if there's a shortage of an item, especially after the tariffs, and if there was some pullback on some items. And it's not just the tariffs issue. It's like in housing, there's a shortage of houses. We may see prices go up on housing even in a recession. It's possible if they're not going to build affordable houses. I'm talking at least in the affordable range where we live. So anyway, the point of the binder, like I say, is to keep track of everything, to pay off early, so I can find my documents quickly and know where we are, to really analyze our investment. It's just a way to be organized, to keep track of, it helps me because then I know how much I can save when I pay off early. And any debt you have, paying more than the minimum payment, saving on interest. The best friend I have is my Financial Calculators app. My uncle told me about it, and I'm grateful for that. Also grateful for my brother-in-law, Roman Barracuda, that gives me great advice, and then Joe Brandt, that gives me great advice, my other brother-in-law. I'm really thankful for guys around me that hold me accountable, that make me think past my limited thoughts. We ask each other questions sometimes and give advice. It's really cool. And my dad has good advice too. But I came from a background where there wasn't that financial foundation, so I had to learn it and build it. But my uncle told me about that Financial Calculators app. Basically, you just put in, there's three main things about a loan. How much you're going to borrow, at what interest rate, and for how long, right? So our mortgage is $54,800 over a 4.25% interest rate over 30 years. You know those three things about your mortgage, then you know what your monthly payment is and see if it's affordable with your budget. The second thing you do then is on that app, you can put in how much more you're going to pay than the minimum payment. And it will tell you not only how much interest you'll save, which for us is over about $20,000, or if we pay off early, or like I say, over $30,000, and how much early you'll pay it off by. So instead of it being a 30-year loan, we're turning it into Right now, my wife and I are on track to turn our 30-year mortgage into a 2.5-year mortgage. That's what we're doing right now. If we pay off in the next few months, and we believe we're in a position to do that and still have our emergency fund and our investments, we're not draining the investments to do that or anything, we look like we can be debt free. Now, I want to say something else. You know why my income has had the room to put extra on the mortgage? It's because of not having a car payment. The more I think about it, and other things, student loans, other types of debts, but it's really not having that car payment. We buy used cars, we have some money on savings for if the repair is needed. We try to get good ones so they don't need a lot of work, and we've been pretty successful at that. Um, and then you have a little more savings for when you have to replace it. But it's not hard to save and replace when you're buying cheaper cars. And no car payment. It frees up your income. How many Americans are living paycheck to paycheck? There's nothing left to put in savings or to put on debt beyond the minimum payment, let alone to invest or to give. And those are the four things you want to do with your money beyond paying the bills, right? And paying the bills, paying the debts, but you want to be able to save and give and invest and spend, by the way. That would be the other one after you've paid your debts off. So we need to watch this idea of consuming and spending when we haven't even paid off the debts we already have. Let me just remind, according to Scripture, it says, owe no man anything but to love one another. Debt is a moral obligation. You made a promise with your promissory note when you signed a mortgage or you signed on a car or a student loan. You signed a promissory note, which is a promise to pay back what you borrowed and at an interest rate over time. And so, unfortunately, a lot of Americans just do the bare minimum with debt instead of getting out of debt. And, I have to agree with Dave Ramsey on a lot of the debt philosophy. I know that some of the math with his strategies don't always work out in different areas, but he's fighting for the consumer. And at the end of the day, he's trying to help people be in the best position they can with the least risk they can. That's why it's the get out of debt first. I cannot tell you how I feel by being close to paying that mortgage off. It just relieves a burden and a stress. We're not even quite there yet, and I already feel this huge relief because we have enough now we can do it. I mean, say in my savings, not using my wife's money, using my own income. That is a blessing. And now that she's pregnant, her income is probably going to go after a while and maybe never return if she decides to stay home. So the more I position myself for my family in a wise way to be able to afford the bills, pay off and avoid the debts, and then have savings, and not just savings for the savings account for just the purpose of an emergency, it's also for investing and targeted spending. So when we want to buy something or take a trip, it's on purpose with the money to do it and not throwing it on the credit card, paying a 20% interest rate or something. And as far as investing, researching, especially during this time of bounty when the investments are already high, waiting till there's some problems, when other people made the mistake of buying too high and then they have to sell or foreclose at a discount, and we can step in with cash from that savings that has been targeted for the purpose, saved for the purpose of investing. And that way we get the best sale price when we go to buy, and then we use that as a return investment. And so I've done this with 2 houses, and I've built my net worth to be, and this house now is well over worth $100,000, and we will not have put in $100,000 into this house. And I know the market's being driven right now, and there seems to be a shortage, pressure on house prices, but still, our net worth is continuing to climb, and I don't near make that. It's just positioning and maneuvering financially wise in wise ways, avoiding as much loss of interest money as I can. And I'm not playing the markets. I am not playing in the stock market. My 401k is there. My Roth IRA is positioned for that. But that's and whatever state pension. I'm working at a community college, public college, as a state employee. But other than that, everything I'm doing, I'm having to just do personally. I hear these people with finance degrees. I have a bachelor's in business administration as well. But we're not taught personal finance in this world. You can have a business degree and not know what you're doing with your own money. This is unbelievable. America is in this huge deficit of financial knowledge. No wonder we're in debt to the hilt. No wonder Americans are living paycheck to paycheck and screaming their heads off when there's a government shutdown and going on food stamps and unemployment benefits in a matter of 5 weeks or less. No emergency fund saved. No backup plan for the lean times. So It's scary, isn't it? And even if we don't have another recession, just be positioned where you can be free to use your money the right way for the things that you want and need and that are good for your growth and actually building wealth to pass down to future generations. Isn't that the right way to look at it? It's biblical. We're not worshiping money. We're not loving money. We're not pursuing money above Christ. Christ is the one giving us the wisdom to manage money the right way that he's allowed us to make by blessing us with health and a job. And this is the time of jobs, people. This is the time of cash before we enter potentially a famine. And by the way, if we were to have a recession, prices can still go up when there's a shortage. America is not prepared for a shortage of anything. But we are pushing, where our price is higher and higher and our money is worth less and less. And at some point, I'm afraid that's going to mess with the exchange rates. And since we import most of our goods and rely on that, even sometimes for food, you watch documentaries of how your hamburger is made at the fast food restaurant. It's an international process to get a little dollar burger into your hands. And that's relying on a world system that has multiple dependencies. And we don't grow our own food, do we? I just planted a garden. It's not big. It's raised beds because the dirt out back isn't worth much. But I've made a little investment, and I'm hoping to keep using that dirt continually. I have a compost pile as well. I'm not the greatest outdoor person. I'm just trying. I'm getting out there and fighting for it here and there. And then I give up, and then I get encouraged. My brother says, hey, get back on there. My brother's one of my greatest accountability partners in my life, besides my wife. And he's like, get on it, you know. And he has a great mind financially, and we bounce off each other probably more than anyone else. And I'm so grateful for my brother, so Elijah. So he's like, get after it, because these are things that create a return. If I'm going to spend money on going out to a restaurant or taking this trip, and all I have is a memory that I consumed, yes, the experience is great, but there's this move in society that is trying to move us away from stuff and toward experience, but at what cost? The thing about stuff and materialism, it's not about worshiping the things. It's about having the assets you need to survive. It's about a long-term value and investment that you need. I'm not talking about buying stuff you don't need at a price you can't afford and with debt that you have to pay off forevermore. I'm talking about making sure you have your assets in place with not only a place to live, but transportation that's stable, but is not overpriced with a new car. I would never do that. And your basics in the home. And I'm not talking about going on some payment plan to get furniture. That's ridiculous. That's another big expense. Jewelry and weddings, like I said, trips and restaurants, and other entertainment. These things are a lot of times overpriced, and then you're encouraged to use debt to pay for it. America's got to break that debt cycle, or it's going to break us. And that's what's coming. There's going to be a point where debts are no longer affordable unless money just keeps getting created out of thin air and interest rates stay low and everybody gets bailed out. But at some point, I think the currency is going to be worth nothing. Now, what they think they can do is print money, as it were, create new money, but not have prices go up. Right? The modern monetary theory, MMT, is popular now and getting a lot of national attention and discussion, because you look at all these democratic plans, social programs coming out in this election cycle. They are pushing one new program over another. Medicare for all, or forgiving all student loans almost, or having a Green New Deal, or a public labor market where the government provides jobs that businesses aren't. Finding ways to tax the rich and try to deal with the income gap as more people are making more money at the top, and all these types of ideas and agendas where the government forces something on society, possibly reduces the incentive to work, because you're not going to be able to keep your wealth that you work for. If you can't keep the fruit of your labor, why labor? And how do you have productivity without labor? And how do you have wealth without productivity? So instead of creating wealth, we're now just spreading wealth, which actually, in effect, reduces wealth. I'm warning you, this whole socialism movement doesn't pay for itself. I don't care how you slice it and what international examples you try to use. It's not human nature to be forced to do something without getting the return on your labor and investment. And so if you try to steal it, Robin Hood, from others that earned it, and employ a lot of people on top of that, they're just going to move overseas. and take their jobs with them. That's very possible. We can price ourselves right out of our own market. And then you have all this debt still to deal with. And printing money isn't the answer. It isn't. It's allowing the markets to set fair prices, set fair interest rates to pay for itself and to be funded based on productivity, not based on a printing press or a digital printing press, as it were. It's just my opinion. We're at a crossroads in this country, and I'm afraid, especially my age group or younger, is coming in thinking, well, everything's been handed so far. We've gotten by with all this debt and money creation after 2008 so far. Might as well just continue the process more and more, and that's what Democrats are promoting. Bernie Sanders' former economic advisor has been out there, and CNBC has been reporting her and talking about this modern monetary theory and how basically as long as there's slack in the economy and you don't create inflation, you can just print money. Who cares about the debt? The debt is an asset because somebody's holding those bonds and that's their investment. Yeah, that's because you're assuming a return on the investment. If the government keeps going into debt and selling investors bonds, and at some point, won't the government be borrowing in order to service its borrowing? At which point it's no longer sustainable? And what makes that bond worth anything at some point? Even if the government promises to pay and will pay 100% and has a AAA credit rating, what's the money worth if it can just continue to borrow? Anyway, and this idea that you can create money but not create inflation, to me, just it's like handing somebody free money and then expecting them not to waste it. I've been thinking lately of the psychology of money. It is so powerful. When you are handed something for free that you did not earn, you attach a different psychological value to that money. There's evidence of this in the research, not only because lottery winners go broke regularly, but because the cocaine effect on the brain. When you make and spend money, there's brain scans to show that that is a cocaine effect on the brain. You blow it because you get this high, a chemical high. That's why when you're shopping or when you get a refund check from taxes or financial aid if you're a college student, or a bonus at work, or you win the lottery, your brain doesn't know how to react to free money, and it blows it. Even earned money. When you get that paycheck as this big lump sum and you feel rich and you have a wad of cash in your hand or in your account, we tend to blow it. Or we have an easy money credit card, right? Or any other easy debt, with low interest rates or whatever, and we just get this chemical high and we start to spend without doing a little bit of math first. So when we're aware of that high in the brain, and the value of money is really pegged to hard work and prices, what we can actually afford with that money. And it's not just a feeling that, oh, I have money, so it must be, easy to spend. There's a psychology there that not only will break your personal bank, it will break society. And I think the more we move into this world of free stuff, instead of focusing on labor and productivity, we're going to see a shift in the value of money. Psychologically among Americans, and in actuality when prices start going up because the money's so easy. Until the whole thing crashes. Because at some point when there's enough government regulation and forcing prices, and then forcing customers on businesses that can't handle it, especially in the medical field, some just may close up shop. And were it not for the big student loans that some of these doctors and dentists have, they might just get out of the business at some point. And then you create a shortage, and then you cannot control prices in that environment. Talk to Venezuela. They tried to control everything, right? With oil money, they did everything with imports. They took over business. They even took over land. And then all of a sudden, they could not control the inflation. And the government's in complete control of that economy. But really, they're not. Economies aren't driven by governments. They're driven by that unseen hand, right? They're driven by market forces, in other words. And I think we're playing with fire, with MMT, with debt, and all these things that are going with it, human manipulation. So let's maneuver correctly in our homes. I can't control the big world, but I can sure try to be faithful, responsible, good steward of my own finances. So I chose to live below my means, to make sure that I didn't acquire a bunch of new debts that would take up all my income. And that way, whatever debt I have, I could use the extra income left over each month from the paycheck to pay that debt off earlier and save on interest and get excited about that savings using my bank app, the Financial Calculators app. And then paying off that debt frees up income to strategize for future investments or other things that are good for my family without wasting the money on something risky. And long story short, hope to position my family in a way that our needs are met and we're growing in value. We're able to help more people. If I hadn't bought this house, I could not help the people that are living with me right now, besides my wife and a new baby on the way. So we have extra 3 people in the house. We had 5 and extra. But we're trying to be a help in a time of need. That would not be possible if I hadn't positioned wise financially the last few years to this time. And especially with house buying, it's about savings. It's about researching. It's about searching until you find that you can cut yourself a good deal. For me, it was some good quality foreclosures, and that's what worked. Sometimes it's looking for a unicorn. It's not easy, but it is possible, and I've done it twice. And keeping my debt levels low so the income has power and potential. Starting with savings. If you're going to spend and enjoy money, do it within a budget. Just do it within a certain reasonable amount. Save first at the beginning of the month when you get your paycheck or however that works for you. Knowing what your bills are. So not necessarily putting everything in savings. Knowing what your bills are. You got to do that math. Just do that math. Don't even worry about how much you're going to spend. How much do you have to pay in bills, right? And any debt payments. Minimum. Okay? And you know your maximum bills. You know your minimum payments on debts. You need to start there. Then what is left over from your income? Go ahead and commit to a portion of that going to savings. And you can automate it with your bank, usually. I just did it manually because I wanted to be in control. So if I had to be able to save $500 a month, then I'm going to do that. And I still leave myself maybe a few more bucks for spending, right? But that way the savings is done. It's tucked away in the savings account of the bank. I don't touch it. I can just look at it on my bank app every day. But then I can focus on the spending and the fun things that you might want to do thereafter. It just works. It just works. It's worked for me since the fall of 2014 when I did my first budget. And now we're in a beautiful home. It's not that expensive. And I know prices are higher than when we bought it in 2017. I mean, it's a lot of pressure on the market right now. But you should still be able to get a home for under $100,000. It's possible in our market. I know agents are going to tell you it's not, but I'm seeing them. It is possible. And then you need to have, I think, 20% saved. That's my recommendation, 20% saved. Have a good credit score in the meantime, so you pay off those credit cards or car payments or anything else on time, every time, if not early. And try to pay the credit card off 0 balance every month and pay no interest, no fees, and no bank fees. That's just how we roll. They're using your money to invest anyway. They should be paying you. You shouldn't be paying a bank. Because you didn't have to put your money with them. So the deal is, you ought to manipulate every little decision right now to your advantage so that when it's time to buy a house, you have the savings in place, you've researched, you know what you're getting into, and you've searched enough options to find yourself a good deal. It may be in the country, it may not be in the heart of the city with an expensive condo on the rooftop pool. It may be something out there with a little bit of a drive, but you can save not just, 50 or 100,000 off the price, but all the interest you would have paid on that higher price. You've got to factor that too. You need the Financial Calculators app or something, some tool to figure that out and the amortization of it. It's so cool. It's so easy when a calculator's doing the work. I'm not a math guy, and I have a business degree. It's a calculator doing the work for me. I don't trust my own math. I'll mess it up. I use tools, especially in advanced calculations. It's powerful. I built a spreadsheet for our college that has advanced calculations built into it for our students to use. It is awesome. I had a military guy tell me, this is better than what they gave me in the military. It's got more built into it than the university down the road. But we had nothing. I started with a bare Excel spreadsheet and Googled these different calculations because of the advanced formulas, put them in behind the scenes on that spreadsheet. When you put in your numbers, it does all the math. It puts in your results. It includes debt payoff, investment, multiplying your savings, subtracting your bills from your income and knowing what's left over, and then any asset values, any business net worth, and then it calculates your total net worth. That's pretty awesome. And that's what life's about, right? If you're trying to break down money, what is your income? What are your bills? What are your debts? What can you save? What can you give? What can you invest? And what can you spend? In that order. And then when you go to build wealth, and we're talking about investing, is there passive income? Is there returns on anything you're doing, which is part of that passive income? Is there compounding interest, right? Is there appreciation, right? Is there a way to use money to make money? Wouldn't it be cool that instead of losing dollar for dollar almost, the interest rate on my debts, I rather am making dollars with my dollars through investing? And again, I'm not talking about risky stock market stuff or Bitcoin or something like that, or even precious metals. I'm talking about hard assets in some cases, such as hopefully appreciating real estate. If you're going to go the stock market route, mutual fund with no load fee and no commission fees or whatever. And if you're going to look at starting a business, I would start small. I would start with less debt that way, but enough to get a return and get it rolling, because you're playing really risky dicey, especially if you've not paid off the things you need to live and you're already in debt on your house and car and student loans. It's not smart. So I'm a one step at a time kind of guy. It'd be nice to have two mortgages, one for my house and one for investing. I can't. That's not nice to me. I'm losing money on both ends and playing risky in the meantime. If I have a 4 to 5% interest rate on my house and then another 4 to 5% minimum on an investment, that's a 10% swing. If something doesn't work out, I'm really in the hole losing money. Is my investment going to make 10%? Not guaranteed. So I'm not playing that game, because I can get out of debt, then take the step on the investment, and that way I've stepped from one thing. You say, but you're going to have to wait. Yeah, it's perfect. I can wait on my investment until I've paid my house, I've saved money, and then step into a market that's receding, get a better price, and still get the return on my investment. And knock $50,000 or $100,000 off some real estate investment if I were to do something like that. Because I wait and I bought low instead of buying when the market's hot and high and under pressure. Wait for somebody else to mess up and be unwise financially, and then I step in at a discount with cash being king, and then save tons of money on the price, and then have the chance to make the return as the market makes a comeback, if we're riding out the normal business cycle, assuming everything doesn't crash permanently. And I don't see the Feds allowing that right now. I see every attempt at even preventing a recession, let alone an actual crash. So I'm in it for the ride, right? And by the way, in the future of the markets, we have an aging population. Let's be honest. It's not just a population that's in debt and living paycheck to paycheck. That's bad enough with no savings emergency fund for a bad day, a rainy day. But it's all, and the fact that our exchange rate, just everything's out of control in prices, it seems. And then potentially some government takeovers of the economy in the case of healthcare, for example, and different things, socialism-wise. But also just the fact that with an aging population, people are going to pull money out of the markets, not put money in the markets. They're retiring. They want their money back now. They invested all their life. Their pension funds start being cashed out, their mutual funds and 401ks and all Roth IRAs, and it just starts coming back. And so you have a market that annualizes 6 or 7% return a year. I could see that going down to 4.5, 4% a year, maybe less. Regardless of history, we were younger as a society. And by the way, I've learned, according to the calculations, that approximately a 4.5% interest rate over 30 years will double your money. So if you can get a mutual fund with at least that, that's pretty cool, which basically compares to a U.S. savings bond. I think you can get those at 20 years instead of 30 and still double your money guaranteed, according to the agreement of the bond, assuming the faith and confidence in the U.S. government to pay back. So, safe investors are looking at bonds a lot of times and looking at those options until there's a real problem in the market. I mean, anyway, who knows what's going to happen in the future of the bond market. But I'm just saying, there are ways to make some money investing, but I really feel like the markets aren't the only way. I feel like starting your own business or a real estate return is another way of looking at it. And so it's up to you. It's whatever's best for you. You might get into the lending world. But that to me is, shadow lending is huge. You can get into all kinds of things behind the scenes, or just invest in companies that do that kind of thing. But we don't know the future of any of this. I'm surprised the Federal Reserve decided to not raise interest rates this year. At least that's the strategy now. They were going to raise them twice. They raised 4 times in 2018. We're going to raise it 2 times in 2019. Now it's 0. And then they may even stop the quantitative tightening in September. I mean, what a reversal since what they were saying in December of 18. So I don't know where, and the markets have reacted. Then you got the trade war, and the markets are up and down all around. And I was just reading yesterday at CNBC, and yes, I research money on the weekends, not just to my job during the week. Um, I, I love the topic and what I can learn. But private equity is where a lot of money is going. There's over $1 trillion just sitting out there in cash, and doing other investments than the stock market, because investors know, hey, and you see all the stock buybacks and things that it's historic what's happened at those levels, and so you don't know what's going to happen. Um, Look, I like having the things we need to live and it being paid for, and providing for my family in the way that God has allowed me to while I can work, while we have jobs in this country and cash seemingly flowing. Position yourself. You say, well, I don't know if the money's worth anything. Well, get out of debt because it's worth that, you know, and then we can worry about the future, right? So I would say be a Joseph, be a biblical Joseph that says you can read the market enough to know there's a time of bounty, there's a time of jobs and cash. It's a wonderful time to get out of debt and save and acquire any assets you can pay for, especially cash that you need while you can get them. And then, as far as the future, don't overdo anything. Hang on a minute. I think this is a pivotal time, because I do not think we can stay on this trajectory forever. Low taxes in the sense of the tax cut, government debt rising, prices rising in many areas or already have risen. People in paycheck to paycheck and debt's just getting bigger and bigger, especially corporate debt and how that's going to affect employment in the future. I mean, look at Sears going under and Toys R Us. Those are just public examples of what's going on in private, with corporations taking on too much debt, even taking on debt to buy back their stocks. I can't believe that. Trying to raise their stock price and return money to shareholders and things like that. And then who knows, why are they not reinvesting in the market? Because I don't think they see a population boom. They see an aging population. They know what's coming. They're not dummies. And they don't see consumerism boosted. People are already maxed out with their debts and their credit cards and their paycheck to paycheck living. How can people spend more? So why would a company invest more? We're fortunate that we have employment right now and unemployment supposedly low, though they don't count people that aren't looking for work, which is bogus, because they're still unemployed. But just saying. But this is the time to take advantage while we see the blessings, because I don't think we're always going to see them. Normal business cycles and recession cycles, and even the biblical cycle, even in the weather. Remember, the time of Joseph's famine after the bounty was probably weather related. It stopped raining. And crops need rain. Just be real about it. And water's not free, even for our farmers in America and around the world. You're never going to get around crops not needing water, as far as I know. I don't know of a crop that doesn't need water. And so if you're going to eat, we need crops, So there's a natural business cycle in Scripture that was just weather related. But now it's economic related in the way companies take on too much debt and then have to recede and lay people off, and you start this cycle of recession. And you see this projecting that there's going to be over speculation in the markets, that there's going to be more growth, and we're going to jump in while we can. We see it in the stock market, we see it in real estate, we see it in corporate hiring, and then their debt levels, and then we see them recede. And you have this natural business cycle, and you must watch that. And maybe we're at the peak of the business cycle right now. And maybe here in the next couple of years, it's going to go the other way, as it normally does, or would, unless they print more money to prop it up, because they don't want the whole thing to crash. You run the risk in a recession of actually cycling to a crash, a great recession like '08, where it exposes the real problems in society like '08 tried to do, and then we patched over it. We didn't let home prices really reset. We boosted all the lending and lowered the interest rate to boost those prices back up again, the same with stocks. And so who knows where it's going to go the next time? Just print a bunch more money and bail a bunch more people out? I don't know. We're in a vicious cycle now. I think we're in a great recession cycle, not just a regular business and normal recession cycle. And I think and that's why the Feds went ahead and pulled off the quantitative tightening this year, because they don't want to go into another great recession right now. Just saying. So, and the Fed guy is Trump's guy. Just saying. I don't care what what people claim, looking at what's the reality here. Well, good luck. um, it's not luck. This is about making wise. I know it's God's blessing and good fortune on jobs personally and health and things like that, but we can do our best to be healthy. We can do our best to get an education, get a good paying job. Don't overpay for your education. There are cheaper options. Everything you do, whether it's education or cars or houses, compare those prices. Cut yourself a deal. Have savings. Avoid unnecessary debt. Have a good credit score if you do have to borrow. Just fundamental things in financial literacy that every American needs to move forward. Some things just say no. You don't need a rental right now if you already have a place to live. That's good for you. You need to save some money, right? You don't buy when prices are at the peak. You don't believe every commercial, right? I mean, just some basics, right? Position yourself for those big decisions ahead.